Welcome to the Mortgage Wise radio show and video podcast, where we educate and provide expert advice on personal finance, mortgages, and real estate investing.
Show me the money.
As a result of what we do, our team has helped hundreds of first-time buyers, experienced buyers, and real estate investors achieve their goals of home ownership.
I wonder if there's a connection there.
Here are your executive producers and mortgage advisors, Randy and Veronica Chambliss.
What up, everybody? Welcome to another episode of the Mortgage Wise radio show. I am Randy Chambliss, the Executive Director of Louisiana Housing Authority, but also a corporate branch manager with Geneva Financial, which is a national mortgage bank. And I have to my right.
I am Veronica Chambliss. I'm also a co-branch manager at Geneva Financial and a Director of Housing with Louisiana Housing Authority. So welcome everyone to episode 22.
The
Mortgage Wise radio show and video podcast. And speaking of radio show, we are on iHeartRadio. So if you're in your car, I know a lot of people don't have time to join us every Tuesday on live. We still post it online. You can go back and watch the replay. But most importantly, if you're in your car riding, you can always download that app and listen to us there.
Yes.
All right. So in this episode, we're going to discuss our new Homes for Hero benefits program and incentive. You'll learn how heroes can access home loans with no money down, 100% financing home buying, plus get additional home buyer benefits that can cover a portion of their closing costs. So it is our mission to provide extraordinary resources and benefits to heroes who provide extraordinary services to our communities every day. Qualifying heroes like firefighters, law enforcement, military, active reserve, and veterans, all healthcare professionals, EMS, and teachers. This program was created to celebrate and share trusted resources to help our Louisiana heroes save money on their home purchase as a way to say thank you to those who serve and sacrifice so much.
So welcome to the show, guys. And, every show is a new milestone that we open up more information or new information, if you will. And today I'm really, really passionate about what we're doing with this show because we're talking about home ownership to our heroes, right? These teachers that we so love, they take care of our children from a young age. And as they get older in high school, they're still there, right? And so we owe them a lot because we're not in our children's presence oftentimes when they're actually physically in the school system. And we can't say enough about our healthcare workers going through COVID-19, the stress that they had, the overload of work that they had, it was just tough, right? So we decided that we wanted to do something different.
And that's on top of what it was going through and experiencing.
Yeah, absolutely. And so we just wanted to help out as much as we possibly can, right? And so we saw an opportunity to really connect with and work with a program. It's a national program called Homes for Heroes, right? And so that's what Homes for Hero is. It's a national program. They've been around for many, many years, and it was established after 9/11, right? What happened in New York City, right? So it was a benefit program and still is a benefit program to be able to help individuals who are in those industry or working in those industry to afford housing and get some cash back. In other words, a benefit incentive to help them to purchase a home, right? So we thought it was exciting. We interviewed them. We have several conversations. We saw that was a good fit, and we decided, we're going to bring it to our listening audience. We're going to bring it to our buyers, our real estate service provider partners. So we're just excited for it. And one of the things like Veronica mentioned earlier, these are, heroes that's on the front line, first responders, police officers, firefighters, right? Veterans, right? Whether they're active in the retirement or they're in the reserve, right? So oftentimes they don't know the benefits that's available to them, right? So we want to spread that word and let them know, hey, this is a program for them. In fact, we created a Facebook group. It's called Resources for Heroes, right? Resources for Heroes. You type that in the Facebook group we literally just created, and it's really designed for individuals to post, share individuals that are heroes in that group, so we could publicly celebrate them, publicly say thank you, right? Can you imagine that? A lot of people just smashing that like button, smashing that love button, saying thank you for your service, right? Business owners in there that's sharing their product or services, the discounts and the benefits to these heroes. So now they have this source, this resource they can go to learn more about all the resources that's available to them, right? Mm-hmm. So that's why, we chose to partner up with them. Now, what we've done, we also provided more financing, if you will, right? Because the benefits is basically is paid at the closing table. Like once you close your home, when you're signing your documents, we could offer some seller concession. Like Veronica and I, we chose to say, no, we're going to give $500, right? As a thank you, as a seller concession at that closing to that buyer, right? So that's what we chose to give on every client that's a Homes for Hero borrower of ours, right?
And just a disclaimer, it's not a physical check you get. We put it on your closing disclosure to reduce the amount that you have to bring to closing.
Correct. It's a credit, right? It's something to be able to help cover some of that cost. But I'm glad you brought that out. It's actually credit, right? Now, what we've done, Veronica and I, we said, listen, how can we add on to that a little bit more, right? Like we want more, right? And so we decided to say, okay, we was creative enough to say, okay, we could provide 100% financing on most loan products for Homes for Hero borrowers, right? And what that simply is, if that person is able to qualify, let's use an example of an FHA loan, and FHA requires 3.5% down for their down payment, then we could fund or finance that closing cost, finance that down payment in a mortgage, right? And so we have a couple of products that's available. There was certain ways that we can do it, right? We're just being creative. But one of them that we actually roll it into a 30-year mortgage, and there's zero payment for that down payment, right? And in 3 years, if that person paid their mortgage 3 years, 36 months consecutively on time, that finance and all that fund is forgiven, right? It's forgiven, right?
So the self-second,
right?
Self-second, 30 years, 0% interest, no payments are due. It's just, they're just counting on you to make 36 first mortgage payments on time for 36 months.
Right. And it could be forgiven, right? Some of them they may not qualify for that. Well, we might do maybe a 10-year term, right? And finance that down payment for 10 years, right? There's no prepayment penalty involved. It might cost them, I don't know, as an example, maybe $60 a month, right? But imagine for a moment, you buy a $300,000 home and you have to put 3.5% down. That could add up pretty significant, right? Mm-hmm. And so that's a way that we have to provide finance. And by all means, we still have VA, right, for our veterans. And we have the VA loan that's available for them. We have USDA, right, RD loan in rural development areas. We have that. Both of those programs are 100% financing too. But the challenge is sometimes, like with the rural development, it may not be in the area that you want to live in, right? And so with this program, it's a national program. It never ran out of funds in the past, right? And we don't anticipate it running out in the future. We don't know. We don't have a crystal ball. Right. But from the track record, it never ran out of funds. Nobody have to wait for that, right? And so the biggest benefit to that, especially in the seller's market, is that when houses hit the market, and if it's a good product, then you have multiple offers on that product. And when borrowers are using some of the state buying money or maybe some of the city buying money, then the seller of the house, they're aware of that. And when they look at it and say, can they close on time? How long? Right. How long is it going to take for them to close? 45 days, 60 days. I can't be waiting that long. But yet this other person come in and they have a traditional loan and it's not tied to, a local or state fund, down payment assistance fund. And so the buyers, the sellers is more comfortable in saying, okay, I'm comfortable with them because I don't have to wait on them to get buying money.
Right, because in fact, it's none of the sellers' business that you're even getting this program. They don't even know about it.
Correct.
But what it does, it helps to kind of cover your closing costs, because a lot of sellers today, they are not willing to pay as much, or if any at all, in closing costs.
Exactly. You know, if they have a good product, they bring that product to the market. And, you know, sometimes we've been seeing, oftentimes the houses, you know, they're asking for X amount of dollars going over that price, right? So it's a very competitive market. So you have to be strategic when you're buying a home of making your offers, right? You don't want offers that's 45 days, 60 days, right? You want it as a shorter closing period as possible, number one. Number two, you might not want inspections for your home for 14 days, right? May not even want it 10 days. You want it as short as possible, right? You don't want to ask for any closing costs if you don't have to, right? Because now when the seller gets these multiple offers and you asking for closing costs and nobody else isn't, then they most likely going to go a different direction.
Even sometimes in some situations, if it's a lower amount that they negotiated to accept, they're willing to still take that offer, because some people think, well, hey, if I offer way more, then they're most likely going to be attracted to my offer, but that's not necessarily the case. It's a number of factors that play a part into what that seller is willing to deal with.
Absolutely. So, you know, you have to put yourself in that seller position and say, if you have multiple offers, who do you want to choose first? Well, you want one with a strong buyer, right? You want to make sure that they're not getting anything that's going to, from a down payment assistance program, that's going to delay them as much as possible. And so you just want a quick closing and be confident somebody will close. Why are we saying all that? Well, again, the program that we have in place to help with the financing of that down payment is a national program. It doesn't affect anything. The seller don't even need to know about it, but yet you still get the assistance that you have, right? And so we just say to our heroes, we thank you, we honor you, we celebrate you, and we want to be able to give back and to offer you this program, right? So what's some of the guidelines, right? Well, a guideline, one of them is you must have a 2-year work history, right? 2-year work history does not have to be on the same job, right? We can go down to a minimum of 620 and still be able to help you with that down payment assistance to give you 100% financing. But if your credit score is lower and it's a 600, right, we can still finance you, but we won't be able to do the down payment assistance because it requires at least a 620. But you know, keep that in mind, like we can close even if you have a 600 credit score, right? So we'll make that happen for you as well. Another guideline is, you know, you have to have some cash available, right? Because there's some cost that's involved. A lot of people hear 100% finance and they think you don't need zero, zilch, nothing, but you still need something, right? For example, you know, you're working with your realtor, they find you a home that you fall in love with and you make your offer, right? But once the offer is accepted by the seller and you have an executed contract, you have to have a consideration, which is called a deposit, to be able to really execute it fully, right? And that deposit oftentimes might be $1,000, right? If it's, you know, under $100,000 purchase price, it might be $500, right? If it's a $300,000 or $250,000 purchase price, and it might be $1,500 to a $2,000 deposit. It just depends. And again, going back to, you know, doing things that can persuade the seller to take your offer, higher down payments, higher deposit helps with that, right? If they get 2-3 offers and 2 of the offers is $1,000 deposit, and here you come with a $2,000 deposit, that's a more strong of an offer than the ones with a $1,000 deposit, right? It makes you look more serious and hungry for that property, right? So my point of saying it is that you have that cost, which is your deposit to put up. Another cost is your inspections, right? You have a couple of inspections, right? Number one is going to be your home inspection. It's not mandatory by the lender, but it should be mandatory for you, right?
Exactly.
So Veronica, do me a favor, share with our listening audience why is home inspections important to have?
Well, your home inspection is very important to have because you don't want to purchase a lemon. It's like when you go to a used car dealership, I guess off of airline or something.
A shot.
Well, you don't want to purchase a lemon, right? So to protect yourself, you want to know everything about that property. So you want a home inspection. So when a home inspector get there, his job is to find everything out, tell you everything about that home.
Or her job.
I'm sorry.
Go figure.
Oh. So their job is to tell you everything about that home. I tell people all the time, even if it's a new construction home, they're still going to find something, right? So it's just basically you just want to know what you're getting into. And that way, once you have your home inspection, you have the opportunity to ask the seller to remedy some things. They don't have to. A lot of people think that they have to, but they don't. They don't have to. But then at that point, if they don't, then you have to decide, hey, do I want to deal with this or not? Right?
Absolutely. And why we say that? Because a home inspection actually costs funds up front that's out of pocket by you, the buyer. That range, what's the price range? Anywhere
from $500 to $800, and it depends on the property type.
Right, so, the square feet, how large it is, 2-story, etc.
Yep. Two units, right. 4 units. So it just depends, but it ranges anywhere from $500 to maybe $1,000. Right. But I mean, I feel like this. I'd rather pay that, and then you get into a house, and then years later you spending thousands of dollars.
Oh yeah, no doubt about it. I mean, if it's a slab home, for example, and you didn't know that the pipe underneath the slab home from the plumbing pipe is broken, that could easily cost $6,000-$7,000 because you have to dig underneath that to get underneath there. Exactly. But you need to know that before you actually put them keys in your hand, right? And so depending on what that inspection find, they may recommend, hey, you might want to get a certified licensed plumber, right? Or a certified licensed AC technician, right? So that's an extra little cost just to confirm the AC, right, is working. Termite, right? You want to have that termite inspection. Growing up in the South Louisiana, Southeast Louisiana, there's a lot of termites in our area, right? So that termite inspection is going to be very, very important, right? That's right. So another home inspection is an appraisal, right? The appraisal is a home inspection. So the property home inspection from the home inspector is going to look at the property itself. The appraisal is going to actually look at the value, right? How the property looked. And so it could compare it, him or her could compare your property with other properties that's similar to it to come up with that value. That's a cost, right? So you just want to be aware that you do need some cash to be able to cover some of those expenses.
Right. So I always tell home buyers that, hey, you always want to make sure you have anywhere from $2,000 to $3,000 saved up initially if you come into us and you want to do 100% financing. Why? Because there is some upfront cost.
Correct. Absolutely. So, we want to make sure that you guys are prepared and aware, right? Awareness is the first step of home ownership. You have a lot of realtors that's here to educate you. You have a lot of lenders that's here to educate you. So you're not alone, right? You have guidance. Veronica and I, we like to call ourselves coaches. Like, we your coach, we your mentor, right? We're going to step you through this process. Why? Because we've done it many times, right? We tell our story a little bit from time to time, and, I'll share this one real quick. I'm not going to unpack it a lot, but my point is, listen, I grew up in the city of New Orleans as an at-risk youth, even though I come from a 2-parent household. They taught me well. They gave me the scriptures. I had an older brother that shared information, but yet I still became an at-risk youth growing up. And I got in trouble twice in my senior year, right? Thank goodness I didn't go to prison. I have a criminal record, right? Most I got guided me through those processes. But at 19, I had my first son. I became a struggling teenage father real quick. By the age of 25, I was working a good job as a stationary operating engineer. I was making real good money, but that money was going right out that door, right? Going in and going out, just flowing, right? So when Hurricane Katrina hit in 2005, I found myself with less than $500 in that bank account. I'll be the first one to tell you my credit score was horrible, right? Because I wasn't working on it, right? Because I didn't have a financial plan in place, right? I didn't know the difference between income statements and balance sheets, right? I didn't have that plan in place, right? And so money was just going right out the door. I had too many expenses, too many liabilities, right? And oftentimes other people is like that too. So I made a change. My brother was giving me some information of how he purchased a home and resources. And I met a mentor who's a senior vice president with a financial service company. He taught me the rules of money as well. And I learned about income statements and balance sheets. I learned that I need to buy and spend money on assets that create more income, right? So my assets is drawing in income, right? Whether it's real estate investing, whether it's a business income, whether it's cryptocurrency, stock, whatever it is, you just need to have an asset that's putting money in their income column. And when I realized, I learned that I was able to, 1, raise up my credit score, 2, lower my living expenses, 3, pay off debt and have some money saved. And in 1 year, right, in 2006, in December, I bought my first home, right, at 26 years old. 30 days later, I bought my first cash flowing duplex, right? I went to the table with a $1,000 check, and I walked away with a $10,000 check because of a strategy that I learned of how to invest in real estate. So 2008, I became a mortgage originator license because I was helping so many people, because people was asking me, how did you do it, Randy? Like, how you go from being broke, busted, and broken to hitting rock bottom to purchasing your first home and your investment property at 26 years old. And so naturally, I'm the type of person I like to share information. When I tell you I was broke, guys, I used to walk past the bank and trip the alarm. Did you hear me? Right? One of my mentors I talked to, one of my mentors, he'll share, and I had the same story. My kids answered the phone when the creditors called. My daddy said he ain't home, right? So, you guys have to know, and I learned myself that in order to get back on your feet, miss 3 call payments, right? So, being broke is bad, right? It was tough, but I learned from the mistakes. And what I'm sharing with you is that if I can do it, and hundreds and thousands and millions of other people could do it, then you can do it too. You just need the coaching, you need the financial strategy, and you need to make yourself, you want to put yourself in a position to participate in your own rescue. And that means that, hey, put the fear aside and move forward, right? Mm-hmm. So with this program, right, 100% financing for our heroes. You have closing costs as a seller concession that we can help, not seller, lender's credit that we can help. So we alleviate a lot of the money situation that you may have, right? We alleviate that credit score situation that you may have, right? You don't need a 680 credit score or 700, right? We could get things done. So for our listeners, Veronica, real quick, just share what this topic is today, because we have some new listeners that joined in.
Okay, so today we are discussing our new Homes for Heroes benefits program and incentive.
Absolutely. And so who qualifies for heroes? Well, the qualification is if you are a teacher, if you are an EMS worker, anybody in the healthcare industry, whether you are a doctor, CNA, LPN, RN, medical assistant, dental assistant, anybody that's working in the healthcare industry, right? Police officers, firefighters, right? And veterans, right? Whether you are active, you are retired, or you are in the reserve, this program is geared towards helping you purchase a home. We're taking you from renters to home ownership. So in this section, guys,
and not in it, because there are some programs that specialize for first responders, right? But it have to be certain houses in certain areas. So the benefit of this program that we have, you can go wherever you want.
Yep. Right? Absolutely. Doesn't matter if you're going to Slidell,
right,
West Bank, Metairie, LaPlace, Baton Rouge, or anywhere in North Louisiana.
Yep. So that's for those who are looking for something to help them, and they have the choice of where they want to live.
Absolutely. Yeah. So we always like to leave some tips on finances, right? So, one of the things that you want to be aware of that in order to put yourself in a position of home ownership, you just want to focus on a couple of things, right? You want to focus on having your living expenses as low as possible, right? Don't add to your expenses monthly, right? Don't create a new bill or a new personal loan, because it takes away from your, what we like to call debt to income ratio, right? And what that is basically we look at your credit report and seeing the expenses that's going out We're not looking at your cell phone bill or your water bill or your energy bill, right? We're looking at those expenses that's on your credit report versus the income that you're receiving from your job based on your W-2 and based on your paycheck stubs. And now we have an accurate count of what your income is versus your debt. And we do a calculation that gives us your ratio, right? And your ratio have to be in a certain range for you to qualify, right? So that's why you want to focus on having your living expenses very low. Focus on either lowering your debts or paying off your debts. You don't have to pay them off, but just lower them, right? Get yourself in a good position. You want to focus on saving as much as you can, right? Might want to partner up with somebody that might can give you a gift, mom, dad, cousin, right? You can give a gift. Somebody could give you a gift on certain loan products, but it can't be financed, right? You can't borrow money to put down on borrow money, right?
Well, you can,
right?
But your donor can,
right? Disclaimer, disclaimer. Give me the holy water on this girl.
We telling the truth. So, I wanted to add to that too. Something you said about, it's in my mind. I'm having a senior moment. It'll come back.
Well, I'm telling my children all the time. I was born in the 1900s, so forgive her. It's gonna come back.
Go ahead, finish what you're saying.
And so, keep your debts down as low as possible.
That's what it was. See, look at that. See why we're a team. So when Randy said keep your debts down as low as possible, pay off your debts, please be careful not to pay off any collections until you speak with a lender like us first. The reason being, when you pay off a collection, that updates on your credit report as if it's a new derogatory account. I know you're like, well, what? I thought that was
Say it again.
Updates on your credit report as a new derogatory account. And what does that do to your credit score? Tank it. It tanks your credit score.
Right.
So be careful, be mindful of that. A lot of people, I've had a lot of people in the past that say, hey, before I come to you, I want to get everything right, get everything in order. I'm like, wait. What you getting right? What you getting in order? Tell me more. So then when they say, well, I have some things on my credit, I'm like, let's talk.
Yep. Because at the end of the day, we the bank, right? We're gonna tell you the guidelines from the bank standpoint, not from a third party who's not giving you the qualification. Right. And so, like for example, quick story, I was talking to a young lady this week, and she had mentioned she had some cash saved, and I always make sure I'm very specific in my questions, right? How much cash do you have saved up so far for your down payment on your home? Not your bill money, but on your down payment. Right, liquid cash, and come to find out they didn't have liquid cash, right? They have money that they was planning on borrowing, right? So I had to catch that. Another couple that had cash, literally physical cash in their house, right? And I'm gonna put it in the bank tomorrow. No, can't do that, right? Because that money has to be sourced, to have to be seasoned for 2 months, right?
Seasoned, not with salt and pepper,
right?
But
season it all for you New Orleans.
Meaning that money has to be in your bank account for at least 60 days or more, so that when we ask for the last 2 months of bank statements, we don't see a large deposit. So that means we don't have to source it. Right.
Meaning that we don't have to ask you for all these documents that you may,
where it came from.
Right, that you may can prove or may not can prove. Right. So we want to keep it streamlined and super simple. So here's what Veronica and I offer. We have a no-fee guarantee. We offer free consultation, right? So when our clients or our potential borrowers call us, we don't charge them for our time. We don't charge them to pull a credit report. We just ask them simple questions to find out where they are, what are their goals, and I want to know why are they buying a home? Like, I want to ask that question, because if that person why is not strong enough, then they're not going to be serious in moving forward and taking the coaching. But if they passion and they have this burning desire to purchase a home for their family, then that's a person I want to work with, because they have a goal, is a burning desire for them, right? And they're open to taking coaching and following the plan. It's not good enough just to have the plan. You have to follow and go into the plan. So my point is, we ask questions and we dig information out So we know how to best serve that borrower, right? And we're going to tell you directly and say, listen, you're not ready yet, right? We teach responsible home ownership, right? Some lenders doesn't do that. And you go to lenders and they're going to max out your loan amount because they get a commission and they want the biggest check as possible. We do not do that. Our goal is to be with you after the closing, not just at the closing. Once you get the keys in your hand and 5 years down the road, we your friend. We still here. We still your financial and real estate advisor, and mortgage advisor, right? We still here. So we teach responsible home ownership, right? And when we sense, hey, you're not ready yet, then we're going to politely tell you, but we're also going to give you a game plan and say, if you do A, B, and C, then you will be ready. And if you follow that game plan, you come to us again and say, listen, I did A, B, and C. We ask them questions again. And now, guess what? Oftentimes, people are ready to go. So in addition to that, we are speakers, like you guys know. And so we are very big on financial education. So you have an organization, you have a school, you have a social gathering organization. If you have a business, if you're a business owner, HR director, HR manager, we could come in and speak and provide that financial education to your organization or your employees. And it doesn't cost you anything, right? We want to give back to the community because we like sowing seeds, right? You can't have a harvest, right, unless you sow seeds. So keep that in mind as well. So anything else you wanted to add, Ms. Veronica?
No, sir.
All right, Ms. Chambliss. So listen, guys, you can find me on Facebook, Instagram at Mr. Randy Chambliss. You can find me online at randyknowsmortgages.com. Veronica mentioned earlier, we are on iHeart Radio. So you go to iHeart Radio, type in the Mortgage Wise Radio Show, you'll see us. We also started to upload videos to YouTube. So type in YouTube, the Mortgage Wise Radio Show, and you can see all the past episodes on both iHeart Radio and YouTube. My direct number is 504-270-2783.
And you can find me on social media under Veronica Chambliss. My direct number is 504-715-4388. And I'm also online at Knows Mortgages, VEE-knowsmortgages.com.
All right, guys. Well, listen, it was a pleasure to connect with you. You enjoy the rest of your day on purpose. Take care and God bless.
That brings today's show to a close.
Oh, come on!
Thank you for listening to the Mortgage Wise Radio Show and Video Podcast. If you enjoyed this episode, feel free to share it with a friend and subscribe. Please follow us on YouTube, Instagram, and Facebook at the Mortgage Wise Radio Show. If you want to learn more about what we talked about today, give us a call at 504-270-2783. Or to view our podcast library, please visit our website, themortgagewiseradioshow.com.
Autobots, roll out.
Until next time, choose to have a great day on purchase, Mortgage Wise friends.
Go home.
Good night.
Good night.
Good night, ma'am. Have a great one.
You too.